right now marks almost 2+ years of much higher rates. And more importantly, rates are a lot higher than what the entire market was predicting by the end of 2024. And now the Fed saying that they're likely to keep rates higher longer through 2025. So what does that mean to most people's biggest investment, their house? And is this big price correction that's been looming on the horizon that a lot of people have been talking about finally going to come? Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And let's look first at the numbers, and then I'll give you some thoughts on what's likely to happen going through this year, for sure, through 2025. And these numbers are for November, but they cover to the end of October. So let's jump in. You'll see the only number I have highlighted is inventory, because this is the star of the show. Back when rates were 2-3%, we got down to 2,000 or 3,000 homes on the market. Now we are all the way up to 11,357 homes. So even from a year ago, we are up 45%. This trend has been skyrocketing really since rates went up. Obviously, as rates go higher, that pushes less buyers into the market, and that means that we're going to typically get higher inventory. But look from last month to this month. For the first time in a while, we actually had a decrease in inventory. And we're going to take a look at why that is. The other big thing, median income, 388,990, up 3.2% from last year, up 2.4% from last month. And then average days on market at 60 days, up last year from 44. And months of supply up from 3.2 to 5.45, and even up from September a little bit. We've been kind of around this 4, 5, and even 6 months of inventory. And if you look it up on Google, they'll say a balanced real estate market is around 6 months of inventory, which is accurate in my opinion. A lot of it depends on the trend, and the trend was more inventory, but that is starting to flatten out. And so now we are slowly getting into a true balanced market. And I would say in a lot of areas it's a buyer's market, but then in some areas like here in Oviedo, there are houses that are still getting 6, 7, 8 offers if it's priced right and in the right area. Remember, your real estate market is extremely local to where you live. Now, another thing I like to look at is the foreclosures, or let's call it the health of the market here locally. So we had 17 distressed home sales in October. It was the same in September. Overall sales decreased 7.3% from October. And then we also had new listings fall from 7.6% from September to October as well. So let's kind of look at the numbers here as a whole. So you can see the average rate in October was 6.4%. We'll come back to that. Total homes on the market, 11,357. That's broken down as about 7,900 single-family homes, 2,209 condos, 1,243 townhomes. This is that listing number that's down. Now, this is seasonally adjusted, meaning this time of the year does tend to go down, but you can see new listings really dropping off for, again, for this time of the year, but also because there's just less sales activity and sellers can't demand whatever price they want anymore. New contracts fell a little bit. Sales closed dropped from 2,249 to 2,085. And then days on market really hovering around this 57 to 60 days really for most of the year. Now, here's the big thing that made a difference. So when we looked at the numbers, you saw that the markets kind of flattened out, meaning inventory for the first time in a while actually went down a little bit. And why is that? That's because in September, rates dropped off. Really through August and September, we started to get lower rates. And remember, the real estate cycle is a 30-day cycle, meaning if rates drop in September, it's not really going to affect closings that happen till like end of October or November. So there's a delayed effect depending on how rates drop. And every time rates have dropped below 6.5%, and they actually got to 6% and even a little bit lower in some cases, that really started driving a lot of demand. Because let's face it, most people aren't saying they're never going to buy a home. They're saying, give me a cheaper payment and I'll buy a home. So then last thing, let's just look at rates for a second. 30-year fixed rates now back up to 7%. But more importantly, let's just look at the trend all the way up to almost 7.5% in April of this year. Then we just started this slow decline as the market was pricing in more and more rate cuts from the Fed. Bottomed out here to 6% or so. Remember, everyone's rate's going to be different based on credit score and all these factors. Then look at some of the GDP reports, unemployment, and a lot of the things that the Fed looks at. They all of a sudden said, hey, maybe we're not going to cut rates as fast as we need to. Inflation, even though things are getting more expensive still, the rate of inflation has went down, and then we had this skyrocket up in rates, which means that the market is likely to continue to get softer. And for sure, until rates fall enough to push demand into the market, you are going to see a softer real estate market. And now my opinion, and I had a different take on this based on the data, that what the Fed's saying now, we are going to have lower rates throughout next year, but not as low as everyone thought. And if rates are higher, that means less demand, and that means that there are going to be a softer real estate market. Now, is there going to be a real estate correction? So people have been predicting a real estate correction for the last few years. When rates got to 8%, for sure was going to happen. As we got more inventory, for sure was going to happen. And the truth is, it hasn't happened. The median price in the U.S. has been pretty flat and just going up maybe a little bit, 1 or 2%. But if we have a whole nother year of higher rates, could that change? And the answer, of course, is yes, with this caveat. You have to get enough inventory to move the market to get a drastic change in rates. Now, that isn't, in median price of houses. Now, that doesn't mean we can't get some seasonally adjusted drops, but if houses were to drop, say, $20,000, for most people, that's about $100, $120 a month difference on the payment. And as soon as rates fall, that's going to get made back up really quickly. And so what's the opportunity? If you own a house, if you want to sell your house now, should you wait? Yeah, because I think if there's lower rates and more people are getting pushed in the market, you're going to have more activity, and that's going to help. And right now, buyers are a little more in control. That being said, there's still plenty of houses that are going under contract and having multiple offers. As this year goes on, we will see a little bit of demand coming back online. But will we get anything to get some kind of big housing correction? So I've used this chart many times. This is the housing market history from 2005 to now. And when we look in 2008, call this somewhere around the peak, January, February, we had 31 months of inventory and we had 25,724 homes on the market. When we go to today, we currently have 5.14 months of inventory and we have 11,560 homes on the market. And we also have sellers that have record equity and record low rates. We only had 17 distressed sales last month. And even though foreclosure rates are going up because they were historically low, it's really not meaningful in my opinion. I've seen this whole video about how FHA delinquencies are going through the roof. But yeah, we didn't hardly do any FHA loans when rates were really, really low. It was a lot of conventional A-plus buyers. So yeah, it makes sense that you would see FHA delinquencies go up. Are they going to go up to get to 25 or 30,000 homes on the market? I would almost guarantee not. Now, I can't guarantee anything. This is not financial advice. Don't get it from me. But if I was buying real estate, and I do, and I was an investor, and I am, next year is going to have some opportunity. And it's not going to be in a major price correction. It's going to be in more flexible sellers that have to come to your terms. And if you own a house and you need to sell, you're going to get about what the market will bear. You're not going to have to do a huge discount. You may have to pay some closing costs. It is a more balanced market, but we're not seeing this major price correction. So can it happen? Sure. But we got to figure out where all this inventory is going to come from to get to 25, 30,000 homes. Every video I've ever watched can't answer that question. But if it does, we're going to track the data right here. Because if we get, I'm going to say over 15,000 homes on the market, we are really going to start paying attention to certain markets. Because even in Florida, like Cape Coral and places like that, have already seen some price declines because of the storm. Hurricane Milton just hit. So all this stuff is yet to be play out, how that will affect the market through 2025. So we'll keep looking at it. Right now, housing market looks good. I think 2026, I think we bottom out. We go under 4 million transactions in 2025. And then from 2026, 27, 28, we'll dig back out. Rates will be lower. And we'll also see a more balanced market shifting back, in my opinion, at least for the data now, more to a seller's market. So as more information becomes available that moves the market, as always, we'll cover it right here. If you have any questions, there are so many loan programs out there. So if you know someone that's been on the fence, they need help with down payment, the payments are too high, whatever. There are programs specifically designed to help first-time home buyers buy a home. And this is a good opportunity to get the seller to pay all these extra costs. And we have people right now buying a home for no money out of pocket. So if you know anyone, send them my way. I'd be honored to help them. This is Rayce Robinson, your favorite Florida mortgage broker. Have a great day, great week, great month, and I'll talk to you soon.